Iraqi Dinar investment, why most people lose money, and what smart investors do differently. What if the biggest mistake Iraqi Dinar investors make has nothing to do with the exchange rate? What if the real reason many people become disappointed is not because Iraq failed to make progress, but because they were watching the wrong signals all along? For more than 2 decades, the Iraqi dinar has remained one of the most discussed currencies among individual investors. Every few weeks, a new prediction appears online. A new headline creates excitement. A new rumor spreads across social media. And thousands of investors ask the same question. Is this finally the moment? But successful investors understand something important. Currencies do not change because of rumors. They do not rise because of online excitement. They move because of economic conditions, financial stability, government policies, and confidence in a country's future. Today, we are separating facts from speculation. We will look at why many Iraqi dinar investors struggle, not necessarily because they bought the currency, but because they misunderstood how currencies gain value. We will explore Iraq's economy, banking reforms, oil industry, financial development, and the important factors that experienced analysts monitor. Because the biggest lesson in currency investing is simple. Understanding the system is more important than chasing the prediction. Welcome back to Global Currency Watch, your source for global currency analysis, economic trends, and international financial developments. Our mission is not to predict the future. Our mission is to help you understand the facts, the trends, and the economic forces that shape currencies around the world. If you prefer balanced analysis over hype, you are in the right place. For many investors, the attraction of the Iraqi dinar is easy to understand. Iraq has enormous natural resources. The country has some of the largest oil reserves in the world. It has a strategic location connecting different regions. It has a young population and significant opportunities for economic development. When people look at these factors, they often believe the conclusion is simple. If Iraq grows stronger, the Iraqi dinar must become much more valuable. But economics is not that straightforward. A stronger economy does not automatically mean an immediate currency increase. Many factors influence exchange rates. Inflation plays a major role. Foreign currency reserves matter. Government spending matters. Trade relationships matter. Banking stability matters. Investor confidence matters. A currency is connected to the entire economic system. That is why professional analysts do not focus on only one event. They study the complete picture. They ask questions that go beyond headlines. Is the financial system improving? Are institutions becoming stronger? Are economic reforms moving forward? Is the country creating conditions that support long-term growth? These are the questions that provide a clearer understanding. One of the biggest mistakes investors make is expecting a single announcement to change everything overnight. They search for a specific date. They look for a secret signal. They wait for a dramatic event. But history shows that major economic changes usually happen gradually. Countries do not build stronger financial systems in a few days. They do it through years of reforms, investments, and improvements. This is why smart investors focus on progress instead of predictions. They understand that economic transformation is a journey, not a single moment. Another challenge is the amount of information available online. Today, anyone can create a video, write a post, or share an opinion. Some information may be useful, some may be misleading. The challenge is learning how to separate the two. Professional investors look for reliable sources. They study economic reports. They follow official statements. They analyze measurable changes. Because excitement can disappear quickly, but real economic progress creates lasting impact. The Iraqi dinar story is not only about a currency, it is about an entire economy. It is about banking systems, government decisions, international relationships, business development, and the long process of building financial confidence. In the next part, we will look deeper into Iraq's banking system and why financial modernization may be one of the most important factors shaping the country's economic future. Iraqi dinar investment. Why most people lose money. What smart investors do differently. When people discuss currencies, they usually focus on one thing: the exchange rate. They want to know if a currency will rise, fall, or experience a major change. But experienced economists often start somewhere else. They look at the foundation behind the currency. And that foundation is the banking system. A strong banking system is one of the most important parts of any modern economy. Banks help businesses operate. They allow people to save money. They support investment. They connect a country with international markets. Without a reliable financial system, economic growth becomes much more difficult. This is why Iraq's banking transformation has become an important topic for many economic observers. Over recent years, Iraq has been working toward improving different areas of its financial sector. These efforts include expanding electronic payment systems, improving banking technology, increasing financial transparency, and strengthening financial regulations. These changes may not create the same excitement as dramatic currency predictions. They may not become viral headlines, but for economists, these are the developments that often matter the most. Because long-term economic strength is built on systems, not rumors, not expectations, systems. A modern financial system creates confidence, and confidence is one of the most important factors in any economy. Think about international companies considering investment in a country. Before investing millions or billions of dollars, they want answers to important questions. Can money move safely? Are banks reliable? Are financial rules clear? Can businesses access modern payment systems? Is the economic environment becoming more stable? These questions matter because investors look for confidence before they commit capital. This is why banking reforms are important. They are not just about banks. They affect the entire economy. A stronger banking system can help businesses grow. It can improve financial efficiency. It can support international trade. It can create better conditions for investment. However, it is important to understand that banking reform is a long process. A financial system cannot be transformed overnight. Building trust takes time. Improving technology takes time. Changing how people use financial services takes time. This is true in every country. Economic modernization happens step by step, and that is why smart investors pay attention to direction rather than instant results. One of the major developments around the world has been the growth of digital banking. People today expect faster and easier financial services. They use mobile payments. They transfer money electronically. They manage accounts online. These systems have changed how economies operate. Iraq has also been working toward expanding digital financial services and reducing dependence on traditional cash transactions. The purpose of these changes is not simply convenience. Modern financial systems can also improve transparency. They can help businesses operate more efficiently. They can create better connections with international financial networks. They can support a more organized economy. But again, progress does not mean instant results. A stronger banking sector can improve economic conditions. However, it does not automatically guarantee a specific currency outcome. Currencies are influenced by many different factors working together. This is where many investors make another mistake. They see one positive development and immediately connect it to a dramatic prediction. But professional analysts look at the complete picture. They understand that one reform is only one piece of a much larger economic story. The Central Bank of Iraq also plays an important role in this process. Like central banks around the world, it is responsible for important financial functions. It works with monetary policy. It supports financial stability. It oversees parts of the banking sector. It manages important areas related to the country's financial system. A strong central bank can help create confidence. And confidence is essential for any currency. Investors, businesses, and international partners want to know that financial institutions are reliable. That reliability is created through consistent policies, effective regulations, and long-term development, not through online predictions. This is why experienced investors often spend more time studying banking reforms than following daily rumors. They understand that the real story is usually happening beneath the surface. While social media focuses on dramatic moments, financial professionals focus on gradual improvements because a stronger economy is not built in one day. It is built through thousands of decisions made over many years. And one of the biggest factors behind Iraq's economic story is something that has shaped the country for decades: its oil wealth. In the next part, we will examine Iraq's oil economy, why natural resources are both an advantage and a challenge, and what economic factors truly influence the strength of a currency. Iraqi dinar investment, why most people lose money, and what smart investors do differently. When people talk about Iraq's economy, one word usually comes to mind first: oil. And there is a very good reason for that. Iraq is home to some of the largest proven oil reserves in the world. For decades, oil exports have been the foundation of the country's economy. Energy revenues have helped support government spending, infrastructure projects, and national development. For many investors, this creates a powerful belief. They see Iraq's natural wealth and think, if a country has this much oil, its currency should eventually become much stronger. But this is where understanding economics becomes extremely important. Natural resources can create opportunities. They can provide income. They can support economic growth. But natural resources alone do not determine the value of a currency. History has shown that countries with large oil reserves can experience very different economic outcomes. Some countries successfully use natural resources to build strong and diversified economies. Others struggle because they become too dependent on one source of income. The difference often comes down to management, institutions, and long-term planning. Oil can provide financial strength, but a strong economy requires much more. It requires a reliable banking system, a productive private sector, strong infrastructure, investment in technology and education, clear economic policies, and confidence from both citizens and international investors. This is why many economists believe Iraq's long-term success depends not only on oil production, but also on economic diversification. A diversified economy has multiple sources of growth. It is not dependent on one industry. For Iraq, future development could involve areas such as manufacturing, agriculture, technology, tourism, and private business growth. Building these sectors takes time. It requires investment, it requires planning, and it requires consistent reforms. But these are the types of changes that can create a stronger economic foundation. Now, this leads to one of the most important concepts in currency analysis. A currency's value is not determined by one factor. It is influenced by many economic forces working together. Professional analysts usually examine several important areas. Inflation is one of them. When inflation is high, the purchasing power of a currency can weaken. Foreign currency reserves are another important factor. Strong reserves can provide greater financial stability. Government finances also matter. Investors look at how governments manage spending, debt, and revenue. Trade is important as well. Exports and imports influence the demand for a currency. And of course, financial institutions play a major role. A stable banking system can improve confidence in an economy. All of these factors are connected. That is why professional analysts rarely make conclusions based on one headline. They study the entire economic environment. This is also where many Iraqi dinar investors make mistakes. The first mistake is expecting immediate results. Many people believe that major financial changes happen quickly. But economic transformation usually takes years. Banking reforms take years. Infrastructure development takes years. Building investor confidence takes years. The second mistake is focusing only on currency predictions. Some investors spend all their time asking, when will the exchange rate change? But experienced analysts ask different questions. Is the economy becoming stronger? Are institutions improving? Are reforms continuing? Is the financial system becoming more efficient? These questions provide a much deeper understanding. The third mistake is following unverified information. The internet has made financial information easier to access than ever before, but it has also made misinformation easier to spread. A dramatic headline can attract millions of views. A rumor can create excitement, but excitement does not always represent reality. Smart investors learn to compare information with reliable sources. They look for evidence. They study official information. They avoid making major decisions based only on emotion. Another important mistake is allowing psychology to control decisions. Investing is not only about numbers, it is also about human behavior. Fear, excitement, hope, impatience. These emotions influence decisions in every market. When people strongly believe in a certain outcome, they may only look for information that supports their opinion. This is known as confirmation bias. It can prevent investors from seeing the complete picture. A smarter approach is to consider both positive and negative information. Ask, what supports this idea? And also, what risks should I consider? That balanced mindset is what separates disciplined investors from emotional investors. The Iraqi dinar discussion is not only about what people hope will happen, It is about understanding what is actually happening: economic progress, financial reforms, institutional development, and the many factors that shape a country's future. When investors look at the future of any currency, one of the biggest challenges is uncertainty. No economist, analyst, or investor can predict every event with complete accuracy. Markets change, policies change, global conditions change. Unexpected events can influence economies around the world. That is why experienced investors do not focus only on predictions. They focus on preparation. They study the factors that could influence future outcomes. For Iraq, several important areas continue to receive attention from economic observers: banking development, economic diversification, government finances, foreign investment, oil market conditions, and international financial relationships. Together, these factors help create a clearer picture of the country's economic direction. One important area to watch is continued banking modernization. A stronger banking system can create a more efficient environment for businesses and investors. When financial institutions become more reliable, companies may feel more confident operating in the country. When payment systems improve, businesses can operate more efficiently. When financial transparency increases, international confidence can improve. These changes may seem small when viewed individually, but over time, many small improvements can create meaningful transformation. This is how economies develop, not through one dramatic moment, but through consistent progress. Another important factor is economic diversification. For decades, oil has played a central role in Iraq's economy. Oil revenue has provided significant financial support. However, relying heavily on one industry can create challenges. Global oil prices can rise and fall. Energy markets can change. International demand can shift. That is why many countries with natural resources work to develop additional industries. A more diversified economy can create more stability. It can support more businesses. It can create more employment opportunities. And it can reduce dependence on one source of income. For Iraq, growth in areas such as agriculture, manufacturing, technology, and private enterprise could become important parts of future economic development. However, these changes require time. Building industries is not a short-term process. It requires investment, education, infrastructure, and strong institutions. This is why smart investors avoid looking only at immediate events. They look at long-term direction. Another important area is international confidence. Countries do not operate alone. Their economies are connected to global markets. Foreign companies consider many factors before investing. They look at regulations. They look at financial stability. They look at infrastructure. They look at business opportunities. When confidence improves, investment opportunities can increase. But confidence is built slowly. It comes from consistent progress and reliable systems. This is why official information matters so much. In today's world, rumors can spread faster than facts. A single social media post can create excitement among thousands of people. But professional analysts understand that not every claim deserves equal attention. They focus on verified information. They follow official announcements. They examine economic data. They compare different sources. Because financial decisions require more than opinions, they require evidence. This is one of the biggest differences between speculation and investment. Speculation often focuses on what might happen tomorrow. Investment focuses on understanding what is happening today. Speculation searches for quick results. Investment studies long-term value. Neither approach removes all risk, but understanding the difference helps people think more clearly. So what do smart investors do differently? They ask better questions. Instead of asking, when will the currency suddenly change? They ask, what economic conditions would support long-term strength? Instead of asking, what rumor is trending today? They ask, what evidence shows real progress? Instead of focusing only on potential rewards, they also consider risks. They understand that every financial decision includes uncertainty. This mindset is important not only for the Iraqi dinar, but for every investment market. Successful investors are not people who know everything. They are people who continue learning. They research, they analyze, they remain patient. They understand that emotional decisions can often lead to mistakes. The future of Iraq's economy will likely depend on many factors moving together: banking reforms, economic growth, government management, private sector development, global energy markets, international relationships. No single factor can tell the entire story, but together these elements provide a much clearer understanding. The most important lesson is this: a strong economic future is built through real progress, not just expectations. And that is why experienced analysts spend more time studying fundamentals than chasing predictions. After looking at Iraq's economy, banking reforms, oil industry, and the factors that influence currencies, one important lesson becomes clear. The biggest advantage an investor can have is not a prediction, it is understanding. Because in financial markets, knowledge is often more valuable than excitement. Many investors spend years searching for one major event. They look for a specific announcement, a specific date, a moment when everything changes instantly. But experienced investors understand that real economic progress usually happens differently. It happens through gradual improvements, a stronger financial system, better regulations, improved transparency, growing business confidence, more efficient institutions. These developments may not create dramatic headlines. They may not become viral topics online, but they are the foundation of long-term economic strength. And that is the difference between speculation and analysis. Speculation focuses on what people hope will happen. Analysis focuses on what the evidence shows. When studying the Iraqi dinar, smart investors pay attention to several important areas. They watch banking development, they monitor economic reforms, they study government finances, they observe oil market conditions, they follow international relationships, they look at whether the overall economic environment is becoming stronger. No single indicator can provide the complete answer, but together, these factors help create a more realistic picture. One of the biggest lessons from currency investing is that patience matters. Major changes in financial systems rarely happen overnight. Countries spend years building stronger institutions. They spend years improving infrastructure. They spend years creating confidence among businesses and investors. This process may seem slow, but sustainable progress is usually built step by step. Another important lesson is the importance of managing expectations. Being optimistic about a country's future is not a bad thing. Iraq has significant resources. It has economic opportunities. It has the potential for development. But realistic investors understand that opportunities and risks exist together. They ask important questions. What progress has actually happened? What challenges remain? What factors could influence future results? What information is confirmed and what is only speculation? These questions help create a balanced approach because successful investing is not about ignoring risks. It is about understanding them. The Iraqi dinar story also teaches a broader lesson about financial decisions. Emotions can be powerful. Hope can create excitement. Fear can create panic. Impatience can lead to poor choices. That is why discipline is so important. Smart investors do not make decisions based only on emotion. They research. They compare information. So, what should investors remember moving forward? First, focus on facts instead of rumors. Reliable information is always more valuable than online speculation. Second, understand that economic transformation takes time. Real progress is measured through long-term development. Third, study the entire picture. A currency is connected to an entire economy. Banking systems, government policies, trade, inflation, and international confidence all matter. And finally, remember that no one can guarantee the future. Not for the Iraqi dinar, not for any currency. Financial markets always involve uncertainty. The smartest approach is to continue learning and make decisions based on research and personal circumstances. The Iraqi dinar is not just a currency story. It is a story about economic development. It is a story about rebuilding financial systems. It is a story about how countries create confidence and growth over time. Whether the future brings faster progress or a slower path, the most valuable tool any investor has is knowledge, because informed decisions are usually better decisions. This video is for educational purposes only and should not be considered financial advice. Always conduct your own research and consult qualified financial professionals before making investment decisions. Now we want to hear from you. What do you think is the most important factor shaping Iraq's financial future? Do you believe banking reforms will have the biggest impact? Or do you think oil investment and economic diversification will play a larger role? Share your thoughts in the comments. If you enjoyed this balanced analysis, make sure to like the video. And if you want more global currency updates, economic analysis, and financial documentaries, subscribe to Global Currency Watch and turn on notifications. Thank you for watching. Stay informed, stay curious, and we'll see you in the next analysis.